Hello, everybody. My name is Bennett Tchaikovsky. I welcome to this video walkthrough. We're going to be doing another job order costing question today. This is my attempt for my classes to create questions that are basically so my students don't have to deal with textbooks, which is always nice. But in any event, this question and presentation is copyright 2024 by Bennett Tchaikovsky. All rights are reserved. If you wish to share or otherwise distribute this, please contact me by leaving me something in the comment below. Also, the opinions presented herein are those of myself and not my employers or any other affiliated organizations, including but not limited to the South Orange County Community College District and Irvine Valley College. So let's go ahead and get started here today. So before we say thank you and before we say goodbye, we've got another question basically over here with YYZ. By the way, if you've seen my questions and you're wondering what YYZ is, it is basically the Toronto airport. The code is YYZ, but it's also YYZ by one of my favorite childhood bands by Rush. So there you go. Now you know something more. Okay. So we create specialized equipment for our customers, and we use job order costing. So the first thing when you look at these different questions, right? So when we're dealing with job order costing, we're preparing something for the customer. This is not mass production. Rather, we're creating something for the customer. And if you're taking one of my classes, I'm not going to be providing you the labels on the T accounts. This is something you're going to have to do on your own. And this is why when we were talking about the introduction to managerial accounting, this particular question from, basically of determining cost of goods manufactured, cost of goods sold, where we only have one WIP account. This is why it's so important to go through and make sure you understand the setup. So we're going to go ahead, and what I want to do with you first is let's talk about how that production process works. We're going to have raw materials inventory, right? Then we are going to have factory payroll. And then we're going to have over here factory overhead. So we're starting here with raw materials, factory payroll, factory overhead. This is what is going to be the genesis of our production process. And as we're using our materials and we're putting them into production, instead of having one work in process account, we're going to keep track of each job we're going through and working on. For this particular question, we have 4 jobs. So this is going to be over here. This is going to be our work in process job 100. This is going to be our work in process job 101. This is going to be our work in process job 102. And this is going to be our work in process job 103. So the rest of this kind of looks the same as what we were going through and doing before. We're going to have our finished goods inventory, or FGI, right over here. And then lastly, we're going to have our cost of goods sold, or COGS. And that's going to be right over here. So we've set up these different T accounts. This is an extremely important step in terms of going through and doing these problems. And that's how I would start it. Now, over here tells us a couple different things. So this is different than what we were doing before. Before, the real big differences between this and the prior problem we were looking on at the previous chapter is that we're still going to have indirect labor, right? So we're still going to basically have this indirect labor right over here. We'll call this IL. And this indirect labor is coming out of our factory payroll, right, which is over here at 490. And this is going to come down to our factory overhead, right, or the amount of indirect labor. So that's going to be the same. But the new other thing we're going to be, or one of the other new things we're going to be introducing is the concept of indirect materials. This is not instant messaging. This is indirect materials. That's one of my dad jokes for today. And we'll see how many more I can come up with before the end of this video. It'll be exciting to figure that out. Okay. So we've got indirect labor, indirect materials. So that's really where these are kind of coming down to. So, and now the other big difference when we're dealing with job order costing is we're going to have on our factory overhead, I'm going to put my actual factory overhead costs on the left-hand side. And I'm going to be going through over here and putting my applied factory overhead on the right-hand side. And the reason why this is very different than what we were doing previously is that as a manufacturer, we need to go through and to get our invoices paid as quickly as possible. And when it comes to this, we don't necessarily want to wait. So remember, what goes into a job? We have direct materials. Those are coming from the raw materials inventory. We have direct labor. That is coming over here from the factory payroll. The other component of what goes into work in process is the factory overhead. However, I may not get a property tax bill until the end of the year, right? I may not know all of my different factory overhead costs until later. So what I need to go through and to do is I'm going to estimate my factory overhead. And here we're going through and doing this at a rate of 150% of direct labor cost. So what we're going to go through and do is we're going to be going through, we're going to basically be estimating our overhead based on direct labor costs that's going into the other parts. And that's how this is going to be a little bit different than what we've been doing previously. Now, what I said over here, if I take a look over here, overhead is applied at a rate of 150% of direct labor cost. If I look at my beginning inventory balances, what you'll notice is, oh, applied factory overhead is 120. How did that come about? Well, it was 80 times 1.5 or 120. 70 times 1.5 is where we're getting the 105 from. The 20 times 1.5 is 30, right? So that's what we mean by using a 150% rate. Okay. So that's one of the bigger differences, but a lot of the things we're going through here and doing is going to be relatively the same. So except for at the very last part, but we'll get to that a little bit later. So now what we want to do, and this is a very important step, we want to set up the T accounts properly. And what I'm going to be asking, if you're taking my class, this is what I'm going to be asking you for. What are the indirect materials used? What was the indirect material used in production? Cost of goods manufactured, ending work in process, ending finished goods, the journal entry to record the underapplied overhead, cost of goods sold for the month ended September 30th, 2024, and total gross profit for the month ended September 30th, 2024. So these are the questions I'm going to be going through and asking basically as you're going through and doing this particular question. So let's go ahead and basically take a look over here. So raw materials inventory as of August 31st. Well, if I'm doing this for the month of September, the ending balance as of August 31st becomes my beginning balance. Or right over here, this is going to be at 80. Coming over here to raw materials inventory as of 9/30/24. This over here is going to be basically be coming over here at 140. My raw material purchases, this is going to be at 600. Now, I don't know indirect materials yet, but we'll go through and figure this out. As we said before, our factory payroll was at 490. I don't know my indirect labor yet, but we're going to be able to figure that out. Now, when I look at these other costs over here, I need to basically figure out what is part of overhead. Well, factory utilities, right? It has the word factory in it, so therefore it's basically it's part of factory overhead. Factory insurance. This is also going to be a part of my factory overhead. Insurance corporate, we're going to call that X-Force, right? So this is going to be not applicable, right? This is a SG&A cost. Advertising expense, not applicable. This is also an SG&A cost, or selling general administrative. This is a period cost that is going to be expensed. Remember, when we're doing these costs here, something that's going into factory overhead is staying in our inventory until when it is ultimately put to cost of goods sold. Okay, so factory equipment depreciation, factory rent, and factory property taxes, right? So these are both going to be right? These are both going to be product costs, and they are both part of our actual factory overhead. So these were our actual factory overhead costs. Okay. So all we're doing so far, we're not making any computations just yet. We're going through and putting things into their proper place. So now coming over here, I have 4 different jobs: job 100, job 101, job 102, and job 103. And it tells me a little bit of things about here. Job 100 was completed and sold for 2,400. What does that mean? Well, this job 100, if it was completed and sold, that means it's going to have traveled on a journey. We're going to have to take it out of WIP, basically put it into finished goods inventory until it gets over here to our cost of goods sold, right? So we have to have that job 100 complete the journey, taking it over here to cost of goods sold ultimately. Job 101 was completed but not sold. Okay, so over here for job 101, we're going to take these costs here, and it's going to stop right here. It's going to stop at finished goods because it wasn't sold. So it doesn't have to be taken to cost of goods sold. Job 102 was completed and sold. Okay, so for job 102, this over here is also going to have to make a journey, right? It's going to come over here to finished goods. Once it's in finished goods, it's then going to ultimately end up at my cost of goods sold. So, and then it just basically says over here for job 103 was started during the month and remained in process, right? So job 103 is just going to stay here. It doesn't have to go anywhere once we go through and look at the costs. Okay. Now we've done this information here, or we've dealt with what we've needed to. Now we're going to look at the beginning inventory balances. So job 100 had a beginning balance right over here of 265. Job 101 had a beginning balance of 223. And that consisted of the raw materials, direct materials in August, direct labor, and then lastly, it included applied factory overhead. So beginning 102, was at 60. And for job 103, this is going to be not applicable. Now, you don't have to write this if you're taking the test, but I'm just showing you why it has a zero balance, because we started it during the month. Therefore, there would be no beginning inventory balance. Okay. Now what we're going to go through and do, so we've dealt with the beginning inventory. Now with this one here is it says that production during September 2024. So for job 100, we have over here direct materials of 100. What that means is that these direct materials were taken out of, we took materials out of raw materials and put it into work in process for job 100. Over here, we have job direct materials, job 101. My direct materials for job 101 are going to be at 120. And again, this is the month of September. So over here, my direct materials for job 101 were at 120. I come over here, direct materials for job 102. My direct materials for job 102 were 200, right over here, direct materials, September, job 102. These are going to come over here for job 102, direct materials for 102. This is going to be at 200. Next one, job 103 is going to be at 80. So over here, 80 for job 103. And this is going to be coming over here, direct materials for job 103. And this is going to be at 80. Okay. So what we've now gone through and have done is we've dealt with the direct materials. Now, while I'm here, if I look at this raw materials inventory, one of the things I don't know is because, well, let's do it like this. If I add up my beginning balance plus my purchases and I subtract the 4 balances of direct materials, I get an ending balance of 180. However, the ending balance is 140. What does this mean? Well, it means we had indirect materials during the period, right? So what I need to do is I need to say, well, 80 plus 600 minus X minus 100 minus 120 minus 200 minus 80 equals 140. Okay. If I go through and isolate X, I'm going to get, and if I move X to the other side, I'm going to get 180 minus 140 equals X. X is going to be equal to 40. So my indirect materials are going to be 40. These indirect materials are going to go down over here to my factory overhead, right? And again, did I do this correct? Well, I want to re-add 80 plus 60 minus 40 minus 100 minus 120 minus 200 minus 80 equals 140. So I've done that properly. So this over here is going to come down over here to my indirect materials. Now, I've also given myself one of the first answers that I'm looking for. One of the droids we're looking for is right over here. Indirect materials used in product. That's another dad joke. Indirect materials used in production during September were at 40. Okay. So this T account balances, so we're good to go. Let's now look at the factory payroll, or what we were looking at with direct labor. Remember, last exam, you had one amount of direct labor going into work in process. You had indirect labor feeding into factory overhead. So here, I'm going to have direct labor, job 100, direct labor, job 101, direct labor, job 102, direct labor, job 103. My direct labor for job 100 is right over here at 150. My direct labor for job 101 was at 90. My direct labor for job 102 was 160. My direct labor for job 103 was was 160 and then 60 right over here. So right now, what we're now going to go through and do is we're going to take this direct labor and put it into the relevant work in process accounts. My direct labor for job 100 is going to be at 150. My direct labor for job 101 will be at 90. My direct labor for job 102 will be at 160. And my direct labor for job 103 is going to be at 60. Okay. So we've dealt with all of these different balances. And now, as we remember, what does the factory payroll and factory overhead ultimately need to have as its ending balance? It needs to have a zero balance. Why is that? Because it doesn't really have any physical substance. Over here, the raw materials, it's basically, these are costs we're basically accounting for during production. So coming over here, these have to have a zero balance. If I look, I say 150 plus 90 plus 60, 160 plus 60, I get a total of 460. This is 490. To make this go to zero, I need to have an indirect labor of 30. So if I come over here, 490 of debits, right? 30 plus 150 plus 90 plus 160 plus 60 equals 490. It now has a zero balance. This 30 does not go to a particular job. It's not a direct labor. It's indirect labor. It's like a factory supervisor who's supervising all of these different custom orders for our customers. So the indirect labor is going to go down here. And this is also giving us the next answer we were going through and looking for, okay, which is what is the amount of our indirect labor. Okay, now what we're going to go through and do is we're going to go ahead, because in real life, we can't really, a lot of these bills are not going to be coming through quickly. Therefore, we have to estimate our factory overhead. And this is what we're calling applied factory overhead. Now, if we go back over here and remember this from the beginning of the video, overhead is applied at a rate of 150% of direct labor cost. If I come over here and look at the balances on August 31st, 80 times 1.5 or 150% equals 120. 70 times 1.5 is 105. 20 times 1.5 is 30. So coming back over here in terms of looking at this, well, if I say, we'll call this AFOH 100, AFOH 101, AFOH 102, AFOH 103. If I take the amount of the direct labor and multiply it by 1.5, I'm going to get 225. This is going to be the amount of my applied factory overhead I'm going to be going through and putting into job 100. Over here, for applied factory overhead for job 101, my direct labor was 90. I'm going to multiply that by 1.5. I'm going to get a total of 135. So my applied factory overhead for job 101 is going to be at 135. For job 102, 160 times 1.5 is going to give me 240. So for job 102, this is going to be over here at 240. For job 103, I'm going to go over here, take my direct labor from job 103, multiply this by 1.5, and I'm going to get 90. So my applied factory overhead for job 103 is going to be at 90. Okay. So at this point in time, I have dealt with all of the information here, and I've gone through and I've started basically, I did do the computations for indirect labor and direct labor. But now let's go over here and do the rest of our journey. So once we've gone through and set up the accounts, right? By the way, I highly recommend you use highlighters. According to Kiera, one of my former students, she says it's extremely helpful. She has a coloring marker company that you can ask her about, and it's a great place. So coming over here, my total work in process for job 100 is going to be 740, but it doesn't stay in work in process. Remember, job 101 was, excuse me, job 100 was completed and sold. So I have to take this amount and I have to have a zero, basically a zero ending balance. And basically, this is going to go to finished goods inventory. And this over here is job 100. So it's going to stay over here. However, it was completed, meaning that it went to finished goods inventory and sold. So it can't stay in here. So I'm going to basically go to COGS, and then it's going to come over here, job 100 at 740. Okay, very important. Let's take a look at job 101. So for job 101 was completed but not sold. So right over here for job 101, 223 plus 190, 223 plus 120 plus 90 plus 135 is 568. So if this was completed, it cannot remain in work in process. So this is going to be over here at 568 or have a zero balance. So my job 101 is going to be over here at 568, but remember, it was completed but not sold. So I'm going to leave it in finished goods inventory. Okay. Over here for job 102, we've got over here 60, 200, 160, 240. So in this job over here, if I read it, job 102 was completed and sold. So it cannot stay in the work in process account. So what I'm going to do over here is say 60 plus 200 plus 160 plus 240, or a total of 660. It now has a zero balance. This is going to go to finished goods inventory over here, 660, 102. And if you're taking my class, you don't have to show this level of detail in terms of the labeling, right? But the reason why I do this in particular is because when I'm going through and when I'm going through and doing these videos, I always want you to understand where the numbers are coming from. That's probably why most of you are watching me on either 1.5 or 1.75 or maybe even 2x speed, right? But it's incredibly important for you to understand where the numbers are going, right? Or where they're coming from. So let's come over here, job 103. So my job 103 beginning balance was zero, had direct materials of 80, direct labor of 103, applied factory overhead of 90. And if we see over here, job 103 was started during the month and remained in process. So I'm going to go ahead and leave this in WIP. Now that gets me to one of my questions. What is the ending work in process as of 9/30/24? Well, everything else was away. So all these WIP balances are zero. So the only work in process balance I have is for job 103 or at 230. Okay. Cost of goods manufactured. What does that represent? What cost of goods manufactured represents is the dollar amount I sent to finished goods inventory. So the total dollar amount I sent to my finished goods inventory is going to be over here of 568 plus 740 plus 660, or a total of 1968. So my cost of goods manufactured, right? It's the total amount I sent over to my finished goods inventory is going to be at 1968. Okay. Now, next one over here is what is my ending finished goods inventory? Well, the ending finished goods inventory, if you think about it, what that should be is just job 101. Why is that? Because it was completed but not sold. So coming over here, if I subtract my cost of goods manufactured or the 1968, there was no beginning work and finished goods inventory from what I sent to cost of goods sold, I get 568. So that's how I know that that particular answer is in fact correct. So we come over here to our ending finished goods inventory is going to be at 568. Now, the next question over here is the journal entry to go through and record the under or over applied factory overhead. So as we look at this particular question, right, what exactly does this mean? Well, my actual factory overhead during the period was 681. The amount of my applied factory overhead during, or the amount my estimated was 690. Remember, my balance here has to go to zero, has to be zero. Now, when we're looking at this, I subtract the smaller from the larger balance. And what does this tell me? Because the applied overhead of 690 was greater than the actual amount of overhead, it means I applied too much or I over applied factory overhead. Now, when it comes to this, right, where does it go? Well, in this case here, my total cost of goods sold is a total of 1,400. If I make this adjustment to cost of goods sold, right? So if I'm going to debit factory overhead, right? So I'm going to come over here and debit factory overhead for the 9, and I'm going to credit cost of goods sold for the 9. When I look at this over here, this amount is less than 1%. So because it is immaterial, meaning it's generally going to be below 5%, we just go ahead and post this. Now, if you're taking my class, right, you're not going to have to do this computation. Why am I not going to have to do it? Because I'm going to give you a separate question that has a materially significant amount of under or over applied factory overhead. So what do I do? Well, to make this factory, I always have to make, remember, I have to make I have to make factory payroll and factory overhead both go to zero. How do I do this? I have a 9 credit balance. To make this go to zero, I need to debit factory overhead for 9. This now has a 0 balance. But for every debit, I need a credit because it is not materially significant, right? And that's going to be the assumption when you're doing these questions with me in my class. I'm going to go ahead and credit cost of goods sold for that amount because it doesn't really make a difference. It's not going to inflate or deflate cost of goods sold materially significant. So when I look at this over here, and what did I just do? Well, in this question over here, I basically debited factory overhead and I credited cost of goods sold. I debited factory overhead for 9, which was my adjustment, and I credited cost of goods sold for 9, which is right over here, right? So that's what the effect of what I went through and did, right? So I credited cost of goods sold and I debited factory overhead. And if I'm going through and doing this, on if I need to translate a journal entry into a T account into a journal entry. If I put over here, I've got a debit to factory overhead. When I'm crediting cost of goods sold, because I'm indenting the credit, this is indented, my account name or cost of goods sold needs to be indented. If you leave it flush left, I will take points off your test. So don't make that mistake. So over here, this is going to be, my date will be 9/30/24. For my account description, right? What do? Well, my account description is to adjust for, and let's see, take a look. Was my factory overhead under applied or was it over applied? Well, because the applied exceeded the actual by 9, this is going to be to adjust for over applied factory overhead. This is why it's so important that when you label the factory overhead account, you put the actual on the left, the applied on the right. So journal entry to do this is see below. Next one, cost of goods sold for the month ended 9/30/24. My cost of goods sold, well, it was at 1,400, but I made this little adjustment. So my cost of goods sold is going to be, I subtract the smaller from the larger value, leave the remainder on the larger side, is going to be 1,391. So coming over here, my cost of goods sold for the month ended 9/30/24 is going to be 1,391. Now, my gross profit, does that mean disgusting profit? Well, if we remember from our multi-step income statement, it's sales less cost of goods sold is equal to our gross profit. Now, we're not asked to do a full-blown income statement, just asking you to do this part over here. So for my sales for job 100 and job 102, my total revenue from those jobs is coming right over here. Job 101 was completed and sold for 2,400, and job 102 is completed and sold for 2,050. So my total sales is 4,450 less cost of goods sold. My cost of goods sold was 1,391. Therefore, my gross profit is going to be 3,059. Okay, so my gross profit for the month ended is going to be 3,059. So as you're going through and if you're taking my class, I don't allow any types of note cards, phones, or anything on my exams. And part of the reason is that I'm going to give you a question like this, but I feel pretty confident having former students who have gone on to take cost accounting, many that have gone on to take and pass the CPA exam, that by giving you a question like this, similar on your exam, you'll be successful, right? And why is that? It's because this is hard, right? It's no matter what you do, however you look at it, this is pretty challenging. So I would just really recommend for you to take these questions, if you're in my class, to continually to go through and to practice them. Most important part. Okay, so coming over here, thank you again for being with me here today. As always, my videos are way too long, but that's okay because you can watch me on a faster speed. But please don't forget to like and subscribe. If you have any questions, please feel free to leave them in the comments below. And I look forward to seeing you on future videos. Have a great day.